The uranium frenzy is on. Nuclear energy is carbon neutral, powers 1 in 5 homes in America, and is the cheapest operating source of baseload power in the US. After 10 years in a brutal bear market, uranium prices have roared to a 6-year high. Bloomberg headlines are rolling, and YouTube and Twitter algos are blasting uranium stories on everyone's feeds. Even Wall Street Bets of AMC and GameStop fame is in on the action, having alerted their members. Here's the deal. Uranium stocks are at multi-year highs. So pop quiz. What has changed in the uranium market to jumpstart this frenzy? A, are utilities finally waking up and buying physical uranium in the market again? Or B, are nuclear reactors finally going to get the credit for being the only net zero base load power option today? Or C, is someone trying to corner the market? If you answered C, you are right. But I'll add it's C with a radioactive twist. I'll explain all the details from the perspective of the largest financier of uranium from 2017 to 2019 and a Rolodex of the largest players in the uranium sector globally. The new player in town, cornering the uranium market. The company formerly known as Uranium Participation Corp was renamed and repurposed as an investment trust. Its name today is Sprott Physical Uranium Trust, and it has now become the largest buyer of physical uranium in the world. How are they doing it? It's a technique called the ATM, or at-the-market financing. An at-the-market financing, or an ATM facility, allows the company to conduct financings on demand, even daily. This capital is then used to buy up physical uranium in the spot market. The chart you're looking at right now shows the cumulative ATM financings during the last 10 days of August via the Sprott ATM facility. Look at that. So daily you can tap into the market from buyers without going through the lawyers and the bankers, and it's a cheaper way of doing it too. The spot market price traded at $40.25 per pound earlier this week. These levels haven't been seen in 6 years. Investors are taking notice, and it's become the hottest commodity and dominating the news cycle. Going back to the ATM money available to Sprott, all the cash raised is then used to buy uranium in the spot market. So the relationship is very clear. The chart we're showing you here is the uranium spot price. So as the money from the spot trust comes in on the ATM, they redirect that and buy uranium in the spot price market. So uranium stocks are spiking higher. I don't think there is a single uranium stock that is not appreciated in the last 2 weeks. Out of the 50 plus uranium names I follow, none have negative returns since August 2021. So I put together a chart here for you. This is the uranium stocks price. Looking at it from the beginning of August, the blue line are the large caps, the mid caps is the black line, and the green is the small caps. What you have to be careful here is liquidity, right? How much it goes up is one thing, but how many dollars traded. So what comes next? The initial size of the Sprott ATM is 300 million Canadian dollars. This means they can issue up to $300 million worth of this trust stock, which in turn represents 300 million of physical uranium buying power minus fees that they have to pay for both lawyers and the banking fees. Sprott has tapped into 230 million thus far of the 300 million facility. So given the rapid success, my guess is that the team at Sprott will likely try to size up the ATM to at least 500 million or the maximum amount allowable without a shareholder meeting, meaning time is of the essence. This could mean hundreds of millions of dollars more coming into the market for uranium buying. But how long will it take for Sprott to get the approvals from the regulators to reload their ATM financing? Hopefully it's quickly, because there is demand in the market for this product. The Sprott Uranium Trust is trading at a significant premium. That tells you that investors are willing to pay more than what this spot price is because they expect higher prices coming. In addition, for the Sprott to go prime time, they will need to list on a major US exchange. That means to get even bigger amounts of the ATM financing, they need to list on the New York Stock Exchange or the NASDAQ. This is something I've been talking about for years. And I'll bet my old partner, Rick Rule, who is the brainchild of this at Sprott, that a major US listing doesn't happen before US Thanksgiving. Regardless, I applaud the Sprott team for their efforts, strategy, and execution. They've done an incredible job. It's a significant tailwind for the uranium market. The goal is to get the Uranium Trust listed on the US, where it can go after really big money. The catch there is getting listed is not a flip of the switch. This will take months to sort out. Whenever you have lawyers involved, you can expect a process of overpromise, overcharge, and underdeliver. Expect time delays. It's part of the training of lawyers get during their articling. Billing Success 101. To all the overzealous lawyers, I'm kidding, but seriously, your industry needs a serious wake up. Options watch. The YOLO traders are coming. Known as Wall Street Bets on Reddit, this group of traders infamously created chaos in the markets earlier this year with their GameStop and AMC short squeezes. It brought hedge funds to their knees. It looks like some of them have begun to buy deep out of the money call options. Call options for September 17th, which expire in 10 days with an exercise price of $35, now have an open interest of 139,000 contracts. Over 50,000 contracts were purchased in the past few days, making it the largest open interest of any Cameco option contract. Each option contract represents the right to buy 100 shares of Cameco at $35 per share. Contracts were bought for pennies, rendering it exact type of trade the WSB, the Wall Street crew, makes. Someone has to sell these traders the call options. Banks or option dealers will hedge their risk through buying Cameco stock in the open market. Once this WSB, the Wall Street Bets engine, gets going, it's hard to stop, as proved in GME and AMC. The one Achilles heel of the WSB group is most trade on retail platforms, which won't have access to the Canadian exchange, which is where most uranium stocks trade. In addition, only a few uranium stocks have options available for the YOLO trade. Now, let's do some math. How high can uranium prices go? The unique part of the uranium market is that demand is virtually inelastic. Utility companies need to buy uranium to fuel their reactors, regardless of the cost. Whether uranium is $45 per pound or $450 per pound, the cost per kilowatt hour difference is a rounding error compared to the similar price pop in natural gas or coal. For example, a 1,000% increase in the uranium price will result in a 24% increase in the electricity generation for a nuclear reactor. A similar 1,000% increase in natural gas will result in a 720% increase in the electricity generation cost for the average utility. The utilities know this, and so do you now. Team Sprott and Wall Street Bets crew, feel free to quote our math. Now, uranium has seen some incredible swings over the last 90 years. Both major bull markets in uranium saw prices for yellowcake skyrocket by over tenfold. The chart you're looking right now are the mega booms and busts. Remember, as I wrote in my book, boom, bust, and echo. Boom, bust, and echo. Here it is. Since 1930, you would think that mega booms and busts would attract enormous amounts of capital to the uranium market, not to mention the fact that close to 20% of America's electricity base generation comes from uranium. But in fact, it's nearly the opposite. The uranium market is tiny. It's a mere fraction of its precious metal or base metal miner peer groups, and it's dwarfed by its older cousin, oil and gas. Look, the chart we put together here shows you the sector market cap comparison. Uranium is on the far left, and you got the precious metal sector. There's the base metals, and then look at the oil and gas producers. Now I want to talk about something that I've talked about in the past, but how it's going to play out for the uranium market. Enter the passive funds. In the last uranium cycles, the passive funds, which were a fraction of the amount of capital that they managed back then versus today, had no way to play the general uranium price with liquidity. The uranium ETF option was a joke and wasn't a true proxy to the uranium price and didn't have the liquidity required to meet the passive funds criteria. The miners were debt heavy and not an ideal option either. But Sprott provides a platform for the passive funds today. And today, passive funds exceed the amount of capital managed by active fund managers. That means algos and computers manage the buying and selling. And when those algos start buying, watch out. Uranium returns can be explosive. When uranium heats up and moves in the uranium stocks can be extremely explosive because there are so few ways to play the space. In the bull run from January 2004 through to June 2007, many uranium stocks soared hundreds of percent. Cameco, the world's largest publicly traded producer at that time, today it's Kazatomprom, but at that time, Cameco went up over 3 times, while smaller speculative plays soared thousands of percent. Here's a chart that shows Cameco and Paladin, Denison, and Laramide. Year to date, myself and subscribers have been strategically rotating in and out of the uranium names. We've locked in several good base hits, and are sitting on a year-to-date gain of over 150% on our largest position. The uranium market is one of the most hated and loved sectors out there. In fact, one of the uranium stocks, me and my subscribers to the Katusa Resource Opportunities, was up as much as 860% in this year alone. And here's the best part. We got those shares for free. Impossible, you might think. But hundreds of people had the same opportunity with this uranium stock, and even a copper stock that's gone up over 1,000% that we also got for free. I've been to all the major projects around the world and have contacts at the highest levels of the market. I am the only resource analyst and investor ever who was asked by the World Nuclear Fuel Market to give the keynote speech at the Paris 2015 conference. That's where the utilities meet with the producers and traders to lock in their uranium purchases. While on stage, my joke that the conference reminded me of a high school dance. But rather than the boys on one side of the hall and the girls on the other, we had the Americans on one side and the former Soviet Union members on the other. Well, the Russians found my comment funny. A few years ago, I laid out the absolute worst case for uranium and proceeded to make significant financial bets and investments accordingly. We even did an interview with an executive of the world's largest uranium producer and a major player in the uranium markets, which was his first ever interview with anyone in the West. Hint, it's probably someone from the East, when no one was talking about uranium. Our patience and bets are being rewarded in real time because this squeeze is unlike any other I've seen in my career. Fasten your seatbelts, and thank you to all the alligators for believing in me. You deserve every profit you will make. Well done, and stay safe.